You are 22 years old. It is a Tuesday in October, 6:47 in the evening, and you are standing in a dealership parking lot. On a sheet of paper in front of you, there is a number, $389 per month. You have done the math 3 times. It fits. Barely, but it fits. You have $2,300 in your checking account. Student loans start in 6 weeks. Your apartment has a second-hand couch and a Wi-Fi password written on a sticky note by the door. You are about to make one decision, and it will not feel like the most important decision of your life. That is the part no one warns you about. There is another version of you in this same city, the same Tuesday. Same salary, same loans, same sticky note. That version is also deciding on a car right now. Both of you. That's where this splits. 36 months. $389 per month. 12,000 miles per year. The salesperson hands you the key fob. You walk out, and here is the part no spreadsheet will ever capture. The drive home is real. The leather seat adjusted to your height. The dashboard lights are coming on like a cockpit. The smell that isn't just new car, it's proof. Proof that you got here, that the degree worked, that this city said yes to you. You pull into the apartment complex and you do not feel like someone who just moved here anymore. You feel like someone who belongs here. Your manager sees the car on Wednesday morning and says nothing, but you see her see it. That feeling is real. It costs nothing extra. It is also worth something real. Here is what is also real. Your take-home is $3,040 per month. Rent is $150. Loans are $387. Groceries, utilities, phone. The $389 fits, but only if nothing goes wrong, and you are 22. Which means something will go wrong. You are not just buying a car, you are buying an identity. The car is the fastest proof you have right now. You go to a private seller 30 minutes outside the city. A 2021 with 41,000 miles and a scuff above the rear wheel. The seller apologizes twice. You don't care about the scuff. $14,700. You put $3,200 down, almost everything you saved in the last 14 months, and finance the rest at 6.9% APR. Monthly payment? $287 for 48 months. The car smells like nothing. The seat takes 3 tries to adjust. Your coworker asks why you didn't just lease something new. You say you wanted to own it eventually. She nods as she understands. You can tell she doesn't quite. The car makes a noise one morning. Nothing serious. But you notice it, because now it's yours to fix. The difference between $389 and $287 is $102 per month. You open a savings account. You put the $102 in there. It sits. It does not feel powerful. It does not feel like anything. You drive home. Make dinner. The car is outside. It is yours, or will be, in 48 months. Gap statement. Path A, $389 per month, 36-month cycle. No finish line in the contract. Path B, $287 per month, 48 months. Then it stops. One of you is paying for an identity. The other is paying for an endpoint. Both cars are in the office parking lot on Wednesday morning. They look the same from a distance. The difference is a piece of paper in a drawer. One has a return date. The other is called a title. Neither of you feels it yet. The dealership has already mailed you twice. Pre-approval offers. The system is designed to make the next contract feel like a natural continuation, not a new decision. You have not thought of it as a new decision. That is the first thing worth noting. There is a man named Marcus who sits 2 rows over at the office. He is 34. He drives a 2019 Camry with a crack in the center console. One afternoon, he mentions, without being asked, that he has not had a car payment since he was 31. No emphasis. No lesson. You file it somewhere without a label. Path A, month 19 of the lease, something goes wrong. Your check engine light comes on. You call the dealership, covered under warranty. No cost. You exhale. That is the system working exactly as advertised. But the same week, your card gets declined at the grocery store. You check your bank app in the parking lot. $74. Paycheck comes on Friday. This is Wednesday. You transfer $200 from savings. It drops to $210. You are not broke. You are not in crisis. But you are 2 unexpected expenses away from one, and the $389 going out every month is not the reason, but it is not helping. You do not connect these 2 things consciously. Most people don't. That is the system working on you instead of for you. The lease ends, you go back to the dealership. The new one is $411 per month. 2 years newer. Before you sign, there is the return fee, 2,247 miles over your cap at 25 cents per mile, $847 due today. No one mentioned this when you signed. Or they did, somewhere in a clause you initialed without reading. You put it on the card. You drive home in the new car. Path B month 31 arrives on a Wednesday. Last payment, $287, transferred the same way 47 times before. No ceremony, no confirmation email, just the absence of a scheduled transfer next month. You move the $287 to the savings account. You now have $1,147 in there. The $100 to $2 monthly difference building quietly for 2 years, plus the occasional extra deposit when you had it. $1,247 does not feel like freedom. It feels like a number, but it is a number you own, and nothing about it has a return date. 3 weeks later, you forget to transfer the $287. Traveling, it slipped. 1 month missed, you catch it, set it up again, move on. The system does not require perfection, it requires continuation. Your coworker Dana picks up a new lease that Friday, white, panoramic roof. I didn't want to drive something boring during the best years of my life, she says. She means it. She is not wrong. She is also not you. Gap statement. Path A, $14,796 paid across 2 leases. 0 ownership. $847 in exit fees that appeared at checkout. Savings account depleted twice. Path B, car paid off, title in the glove compartment, $1,247 saved, $287 now moving somewhere else every month. One side has been arriving for 2 years. The feeling in the parking lot, the manager who noticed. Real, and the cost was also real. The other has 2 years of an endpoint nobody photographed. Same parking lot, same Wednesday morning. One is getting out of something newer. One is getting out of something they own. It does not announce itself. You are living your life, not auditing it, but the distance is visible now, not a crack, a space. Now here's the month that runs parallel. March, both of you. Path A, $411 leaves on the 3rd. The car stays. Next month, $411 leaves again. The car stays again. This will continue until the contract ends and the car leaves too. You have made peace with the arrangement. Path B, $411 moves into an index fund on the 3rd. It joins what has been building since the car was paid off. You are in a meeting when it happens, about something unrelated to any of this. Same month. Same $411 gone from 2 different systems. One felt like maintenance, the other felt like momentum. Neither one was permanent. But neither one was free. The payment was never the cost. The payment was the ceiling. The number everything else in your financial life had to fit underneath. Path A, February was the month the system showed you its edge. You want to move. The apartment is fine, but at 28 fine is starting to feel like settling. You call a lender about a small place, not big, just yours. The number that stops you is not the down payment. It is the $411 per month, still on the books, 17 months left. Sitting in the debt calculation, the way a wall sits in a room. It does not move. You can qualify, but for less. Early exit on the lease, $2,300 plus penalties. You open a new tab, you label it car cost versus moving timeline. You stare at it. Then you go make coffee. You do not come back to it that evening. The system held, the car still runs, you are still in the apartment. But now you understand something you didn't at 22. The contract does not care about your timing. Path B, the market dropped 31% in 11 days. You have been putting money into an index fund for 2 years. Not a lot, but enough that watching it fall from $18,400 to $12,700 inside a week hits differently than you expected. You know the correct move is nothing, you do not sell. But you do not sleep that week. Not because of the number, because of something underneath it. A question. What if the logic was built on something less solid than it felt? You pay $185 to hear a financial advisor confirm what you already know. You do not regret the $185. You regret that you needed it. The market recovers. The question gets quieter, it does not leave. That same month, you forget to rebalance the portfolio. Work project, friend in town, a weekend that moves faster than planned. The rebalance happens 6 weeks late. The system doesn't break. But you notice it required you to notice. Gap statement. Path A, $0 equity from any vehicle. Moving plans paused by a $411 monthly liability. Early exit costs $2,300. Path B, $23,100 in the fund after recovery. Car owned. Nothing on the books is blocking the next move. The distance is $23,100, and one of you cannot leave the apartment yet. One is tired of the ceiling. The other is tired of not being certain the floor holds. Both are tired. Both systems have been running long enough to show their real shape. Path A, you got the promotion. Salary finally matches the number you had in your head when you moved here. You take a week. Then you go back to the dealership. New lease, $539 per month. The kind of car where the salesperson mentions the brand before the model. Your manager's manager sees it in the garage on Monday morning, stops, looks, gets in the elevator. The feeling is not identical to the one at 22, but it is related to it. A descendant. You are still arriving. You have been arriving for 11 years. There is a man named Roger at the coffee station on a Thursday. He is 51, former director, not someone who gives advice unprompted. He is looking at his cup when he says it. I leased for 14 years, low payment, new car every 3 years, never deal with maintenance. Then I added it up, $71,000, gone. Not a single piece of paper to show for it. I couldn't even tell you what color the third one was. He takes his coffee and goes. You sign the new paperwork on Friday. Not because you didn't hear Roger. You sign because the system has no clean exit that doesn't cost something, and $539 fits, and you are not ready to settle for something less. Roger's $71,000 goes into the filing cabinet, next to every calculator tab you've ever closed. Path B. You buy the second car in cash, $11,200. A 2020 with 52,000 miles, no loan officer, no APR, no monthly number. You drive it home and park it next to the first one. 2 cars, 0 payments. The mortgage came through clean, no car payment on the DTI, 30-year fixed, locked before the next rate move. The house is not large. The neighborhood is not the one you imagined at 22. But it is yours, the way nothing leased has ever been. One November evening, you are at the kitchen table with a spreadsheet open and coffee going cold, calculating whether to sell the older car and redirect the capital into the fund. Your partner walks in. Are we living, they say, or are we just optimizing? Not with anger. The way you'd ask if it's going to rain. You close the laptop, you keep the car. But the question follows you, into the next week, the next month. You are not sure when the system stopped being a tool and started being the point. Gap statement. Here's what the spreadsheet doesn't capture. Path A, $539 per month, a title that belongs to someone else. Roger's $71,000 fits in one sentence. Your version is still accumulating. Path B, 2 cars, 1 house, a fund that survived one serious scare and kept going, and a question over cold coffee with no line item. One is still paying to look like they arrived. One arrived and is not sure the destination was worth optimizing for. Path A, the car is silver this time. You don't remember choosing silver. It was the available trim. The timing worked with the end of the current contract. The salesperson said silver holds resale value, and you almost laughed because you have never once held the resale value of a leased car. You hand it back. You start again. You think about the drive home at 22. The dashboard lights. The parking lot at the apartment complex is the feeling that the city finally said yes to you. That was not a lie. You were 22, alone in a new place, and you needed to belong somewhere. The car gave you that. You know the cost now, you know it precisely. You do not call it a mistake, you call it a system. And this one costs you the one thing no contract could ever include, the option to stop. Path B, nobody asks about your car anymore. This happened gradually, then completely. At some point it became invisible. Not because it was bad, but because it was simply there. The way a reliable thing disappears into the background of a life moving toward other things. The house is paid down. The account has compounding that is too slow to be exciting and too large to be ignored. Your partner's question, are we living or are we just optimizing, never got a formal answer. You are not sure if it needed one. You are not sure it didn't. You are not sure even now when the system stopped feeling like a tool. You keep going anyway. Both systems did what systems do. One kept you looking like you were winning. The other kept score differently. One spent 18 years arriving. The other spent 18 years owning. You are in a parking lot somewhere. It is not the same lot from 22, but you are making a decision about a car, and it will not feel like the most important decision of your life. It never does. That is the part no one warns you about. Small decisions do not feel important until they are the only ones that were.